JB Cycles here with a video on the S&P on November the 1st. I think the S&P needs a little bit more topping formation before we are headed down to the 17-week cycle low sometime in December or even January. We have been seeing a rally since April with hardly any pullbacks at all. And as you see, we have been through one 17-week cycle going up and then down without any pullbacks. No real pullbacks here, and that kind of is what has made me rather confused about what's going on here. But now we are having this A, B, C formation, which is more or less what I expected earlier this year. If we go back to this video here from June the 11th, we can see it was before the summer, and I said this was a crossroads. You know, either we have had my double top scenario and should crash down, or we have the extended bull market with a top around October, November. And I also later I drew this general scenario in green, and we can see we are kind of following this scenario, although we never got this pullback which I expected around here. So I also have been following these historical analogs where we had a fake breakdown and then an extended bull market. So my favorite analogs was this from 1965. However, looking at the price action, it is actually this one from 1980 in red, which correlates best with the rally we are now experiencing. Anyway, these analogs were suggesting a top around November. I also had these two that could suggest an earlier top, but you know, if Trump had not tacoed again, and if he really had put on these tariffs on China, you know, maybe we could have continued this crash that we've almost started here and followed these analogs. But it was taco again, so we are now more following these. So which one is it? Cannot say exactly, but we will come back to that. So longer term, you know, we have the 3.5-year cycle, and the top this winter would have been perfect, but problem is we crashed down too quickly, and the crash is most often bullish, so we extended this bull market. However, you know, in this bearish phase here, we shouldn't. It should not be possible to just continue in rallying here. I would call this, well, I don't know what to call it, but you see here we had this sideways move in 2011, 2012, but here we were, you know, trying to break out before we finally did. Here in 2015 we had a more, call it normal ABC, mild bear market, and this one in 2018 was very unusual, but you know, you see it's also kind of a sideways, a broadening formation, but you know, in general sideways here. And that is what this should turn out to be, although it looks like we are breaking out, but it should not. I'm expecting, you know, something like this, making this. It should end up as a sideways action into next year sometime, next summer or fall. And then, as you see, we have another bullish 3.5-year cycle going up into 2028. So after this weakness, I'm not expecting the end of the world. I'm not very doomish, as someone has called me. I'm just saying the cycle here says do not expect anything bullish. Now I'm not saying you should go out and hate and short this market, what I have been telling my employer is we should stay in cash in this period. There's a very high risk but no guarantee of downside. Stay in cash in this period, and then when we get to next summer or fall and we have some kind of an oversold condition, then it's time to get back into the market with very little risk. And it looks like that the 28-year cycle and the 56-year cycle should be topping in 2028. So the really big weakness did not come here this year and next year. I kind of expected it, but no, it looks like it's coming later. So what do we have? Let's just see. We have here's the quarterly cycle in green and the composite of these two. We see the quarterly cycle is going up. It still has a little bit to go. It's also an earnings cycle, so with earnings we always rally, almost. I think we have a little bit left here before we roll over and go down. Let me see what else we have. My wavelets. So yeah, I was kind of confused about this 10-week oscillation low. Where is it? Is it here? Is it here? For a long while I thought it would be here and we were making a top here. The market fooled me once. I was saying, oh, this looks like a top, we have to make a pullback. No, we were not making a top, we were making a low, and then we broke out. And then again, over here, oh, we are making a top, we should roll over, we should correct, but no, in fact, as you see my purple wavelet, we were making a low. And then the third time here, I said we are rolling over, we have to correct, we have to go down to make a 10-week oscillation low, but that's all that we got. And once again, a very early low. And now we're in another 10-week oscillation, but this time it should be shorter. So let me see. Yeah, I showed you this. This is the number of trading days above the 50-day moving average, and going back 75 years, we have only 1, 2, 3, 4, 5 times that we have been this long above the 50-day moving average. And that is because, as I showed you here, my 17-week cycle. What we have here, first we had an early low, so that means when we get to this cycle top, we have already rallied for quite a while. And these very long extended rallies is when you don't break down in this bearish phase in the 17-week cycle. You don't break the moving averages, and then so you make an A, you rally with an A, and you go sideways with a B without breaking down, and then you get the final C. And that is how you get these very long rallies. And this one is especially long because it started early, and none of these smaller pullbacks were real pullbacks. Didn't break the 50-day moving average, didn't make a real A, B, C pullback. It's always just A and that's it. A and bear trap, A, bear trap. But now we have a setup that's, I'm not guaranteeing it, but where is it? Here, yeah. So, well, this is the general scenario, but it doesn't show it very well. Let's have a look at some analogs. So this is the previous bull market top. It shows up as an analog, and it says, this final rally, it could have an A, B, C shape, and it looks like we need a little bit more sideways action before we break down. But then we have this one, it's the COVID crash. We could just crash down. I'm not expecting that. We have this one from 2018. Yeah, I think that would be ideal. A small double top here is kind of what I'm looking for. And we have this one from 2010, just before the earthquake in Japan. We have this one from 2007, suggesting it could be a bigger topping formation, or this one from 2006. So we have to see, I think we're very close but not quite there.